Treasury Secretary Yellen says that asset valuations are elevated by historical metrics. So as we can see, that news came out at 1:36 p.m. All right. So now let's look at how the market responded. This is a 5-minute chart of the SPY. And she obviously said that before the news came out. So let's look at how it responded. All right. So now, so she said it here. And the market ended up just tumbling all day right after she said that. How much of a fall was that? Approximately probably like 1% at least. Yep, 1.10%. The IWM fell even more. Has to be double that, to be honest. 2.20%. Yep. So that has a lot of weight. Whatever she said meant a lot to all of the investors, and especially since she said that the valuations of companies today are very, very conflated. That's very, very bad for equities. That's why the markets tumbled essentially today. All right, so as you can see here, this is a daily chart of the SPY. We held relatively well support above 388. The trend line is still intact. We need to see if this stays above 384, essentially. If 388 breaks and if it stays above 384, then we're still intact for a bullish move. If not, then we're going to have to reconsider everything that we've been doing here. So here's a chart of the NASDAQ, the QQQ. Relatively choppy day as well, obviously. It broke 318. It needs to hold above 314.10. If 314.10 doesn't hold, then especially given the fact that the IWM also fell very, very heavily, 310.90 can also end up potentially breaking. But let's see how that goes. So the Russell 2000, the IWM, was exceptionally interesting to me. So these are 3 trendline channels essentially that I drew out since the beginning of this monstrous move back in October. So since October, this was back essentially when the vaccine news started becoming more positive, and this is also when there were more signs of Biden potentially winning the presidency. So because of all of these different factors, the Russell 2000, which is the IWM, value related stocks, for example, energy, um, financials, stocks that are basically very influenced by the economy and value, essentially started doing much, much better. And they were the clear winner since October. So now these 3 trend lines essentially were drawn out. And today, I ended up longing at this bottom level right here. Okay. So this essentially needs to hold on the IWM. As we can see, the IWM was the biggest loser today as well. The QQQ and the SPY did not move as violently to the downside. 215 essentially, 214.75 really needs to hold. I have a stop loss below this trend line. So this is very, very interesting. This is basically like a make or break level for this entire uptrend since October, right? If this breaks on the IWM, then we would need to reconsider new support and reconsider our strategy. And the next level that would be very, very interesting would be 213. But if we break this, essentially, we would have to become more bias short as it breaks this trend line and this upward momentum. Okay. One other interesting thing that I want to share with you guys with the IWM is that the MACD is extremely oversold. So usually when that happens is that it means that there is more potential upside. So when the MACD line crosses over this middle line, essentially, it means that there's potential upside. So the fact that we're so far below it means that there is a slight chance that we can end up rebounding upward. Another interesting thing is that this is the almost as low this is essentially the MACD line is almost as low as it was back in September. So in September, right here, MACD line was at negative 366, right? From here, we bounced up. This was the candle. We bounced up forward and we ended up, trending upward. Today, we're at negative 364, okay? So we're also at potential support. But, given everything that's going on in the market, I just blindly longed here. I wouldn't be surprised if we bounce off of this potentially even go up to maybe even 220, 221 maybe. Have people get another entry for their shorts and then bring it down even lower. So let's see what happens. Pretty interesting few days, few weeks going into the market. The US 10-year yield had a very red day today. As you can see, this trend line is still holding for the US 10-year. And the fact that the 10-year still had a very red day and the NASDAQ had a red day as well, it means that the correlation, again, it's not as strong anymore. But yeah, so now what we're going to look at is the dollar. The dollar had a huge, huge upward move. Looks very, very bullish. It doesn't look too good for, actually, the correlation for the dollar isn't also as strong as it once was. Given the fact that we were at such lows, it was just a given that it would end up bouncing a little bit. So once the correlation persists, that's when things will make more sense. Bitcoin bounced off of this trend line perfectly at 54.9, at 52.9, and this level essentially right below it, the 50% Fibonacci level at 52.4, needs to hold as well. And we could also see that the MACD is also extremely oversold, giving an opportunity for another upward move. We're at support. This can also, mirror what we saw on the IWM earlier. So Apple didn't really do much. We're still, relatively bullish. Amazon, it was actually up today, and it closed above this Fibonacci level at 3102, which is very, very bullish. So now I'm going to go into all of the stock picks that you guys wanted me to go over in the comment section. So everyone that posted a comment on my YouTube video, I'm going to go over the stocks that you guys chose. All right. So Tesla, obviously, given the fact that the NASDAQ and the market in general has been falling, doesn't look too great, right? But in the short term, these levels of support are very, 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 very important. So the 38.2% Fibonacci level at 650, essentially 649.35, really needs to hold, right? And tomorrow, this is tomorrow's candle. It'll be right here. This trend line also needs to hold, which is essentially all around the same price. So this is going to be a very major important level for Tesla. We can potentially wick down below it and then bring it back higher, but this is a very safe support level on Tesla. And if this breaks, then it doesn't really look too good. The MACD is not below it, right? It's above it. So when the MACD is above it, that means that there's potential more room to the downside. Okay, so that's something to take into consideration on Tesla. Check, CHEK. Yeah, this also, it broke a trend line. It broke the upward momentum. It still has downward room to go to 156. There's a gap to fill at that level. I'd be very, very careful about going long check here. I'd feel way more comfortable buying check around 160, 156, this area right here. But yeah, that's what algorithms and institutions and everything are going to be looking for to fill the gap to 160. Okay. ZOM. ZOM is at pretty amazing support, actually. It looks really, really nice. So this trend line from back in December 2020, we're almost essentially at that level of support. The trend line would be at 174, 173. Those levels need to hold. If those levels don't hold, then it doesn't look too good for ZOM, because then it can, start retesting all of these wick areas. And these wick areas aren't very solid levels of support. Another interesting thing, though, for the bullish perspective on ZOM is that the MACD level is still very oversold. So again, when the MACD level is oversold, there is more potential room to the upside. So given the fact that we're at support, the MACD level is oversold, things can potentially look good for ZOM. STPK. It's also at somewhat of a decent level of support for the first level of support, right? That would be at 25.99, 26, right? If that level holds, then, yeah, the MACD is also oversold. It can potentially go up. But again, this isn't the best traded stock. It doesn't have as much, trading history as these other stocks, it can easily fall to this other level of support down to like around 2250, 2275. So I'd be very careful about going extremely long. I'd have a tight stop at like around 2650 if it breaks below that. Sorry, no. If it breaks below 2630, I would have a tight stop somewhere around there. But yeah, so we're currently still in an uptrend on it. So hopefully it bounces. Depending on how you're trading it. But yeah, good luck on that. Not the best setup. There's way more better setups. I'd be careful. OEG, very interesting setup as well. As you can see tomorrow, there is a confluence between the 61.8% Fibonacci level at $5 as well as this trend line. Okay, so this whole area is very, very important on OEG. If OEG breaks 495, 490, then that would be very, very concerning, especially the fact that they have earnings on March 30th, right? So usually stocks tend to, like good stocks, they tend to run up into earnings, right? And then when earnings come, it dumps. So now, given the fact that we're at this level of support, let's see how OEG responds. I'd be very careful again, but we're at support, so you can always go long and just have a tight stop. But I would definitely sell all of my shares before earnings day. CTRM, very similar to OEG. This upward trend line coincides with our Fibonacci level at 85 cents. Essentially, 82 cents. Actually, so tomorrow, right, if we have a very, very red day, this Fibonacci level at 85 cents is going to be the first level of support. Okay? If 85 cents breaks, then this upward momentum from January, this would need to hold. And that is currently at around, tomorrow that would be around 80 cents. So if you have a stop a little bit below it, 78 cents essentially needs to hold for CTRM. If 78 cents doesn't hold, it doesn't look too good for CTRM. Also, we're very oversold on the MACD, so it can potentially move back up. But, given it moved very, very quickly and then it fell very quickly, I'd be careful. Also, we're still in a bear flag position, bear flag pattern, which is a bearish pattern. But yeah, no, we are at support. Another solid trade if you just keep your, stops tight. This still has room to the upside as well. So, yeah, it's just a matter of how much you want to risk. So good luck on that. FTEK. FTEK, pretty similar to, these other stocks. It's just they're in an uptrend and they're sitting at the Fibonacci level, which is pretty interesting, the 61.8% Fib level. These levels need to hold at 312. And then this trend line needs to hold above essentially 395. I would have a stop maybe around 290. If 290 breaks, then I'm out of the trade. But, the fact that we still, like, we've fallen huge. And then especially in these past few days, we've fallen. And the MACD, if it was a bullish momentum, if we had bullish momentum, essentially, right, for the stock, the MACD would fall much faster, right? So if it fell much faster, that would mean that, hey, algos and institutions and everything, they want to bring it back up. But we've barely fallen, and the price has fallen much faster than the MACD has fallen. So usually when that happens, it means that there is much more downside potential. So I would be very careful on FTEC. BFT, very, very interesting chart. All right, so there are a few ways to look at this chart. Okay, so you can make a trend line from March 4th and connect the closing candles all throughout, a similar way that I did, and you would just sell it if it crosses below this trend line. Okay, you would have a stop a little bit below the trend line, and if it closes below it, then you're out of the trade. In the shorter term, 1543 needs to hold, which is the 38.2% Fibonacci level on BFT. Otherwise, this trend line would be at, or essentially tomorrow it would be approximately 1520. So I would have a stop loss around like 1505. If 1505 hits tomorrow, I'm out of the trade. This is somewhat of a decent risk reward. You're risking essentially like 60 cents in exchange for potentially it can hit 1750 even. So, you're getting over a 3-to-1 risk reward. Not the best trade, only because the MACD is also still above this level, which means that there is still potential room to the downside. So I would much rather get into stocks where the blue line that you see here is below this, which signifies that there's upward potential, okay, which doesn't seem to be the case on BFT. NNDM. Ooh, what a. I remember this. All right, so NNDM, very, very interesting as well. Literally sitting at the 50% Fibonacci level at 904. Okay. Honestly, if this breaks, then I am out of the trade. It's pretty tight risk reward. If it falls below 904, I would probably have a stop around 890. So you're risking essentially what, 25 cents really in exchange to make a potentially, much more than that. So it's a pretty tight, pretty decent trade. I should have probably been giving the risk rewards for the rest of the trades as well, but that's okay. You live and you learn. I'll do that tomorrow in the other stocks that I post. PLTR. All right. PLTR. Dude, Kathy Wood is loving this stock, but it's not doing too great. So this upward channel from October, right? This basically it's very close to this area. The Fibonacci level that needs to hold essentially is 61.8% at 2285. 2285 needs to hold on PLTR. Hopefully it does. You can see that the MACD is a bit oversold. Not as oversold as I would have liked it to become, especially given that we had a few major red days. It should be way down here if it looked much more bullish. But we're still here, which means that there's still potential room to the downside. So what could happen is we can trade, so the MACD can become much more oversold as this level touches. So let's see how that works. Essentially, this trend line is very important. It's really the make or break, in my opinion, for PLTR. And tomorrow, obviously, as the price, as more days increase, the trend line increases. So what you can do is you can just connect this same trend line the way that I did. Just pause the video and just see where I did that. Or tomorrow. I mean, really, tomorrow I would just have a stop at 2145. Really, if 2145 doesn't hold, then it doesn't look too good for PLTR. But then on the upside, it's still relatively a decent trade longer term, only because you have such institutional backing in PLTR, and it's a good company, has a nice story. So, it's a pretty decent risk reward as well. If you're going long term, you're buying it at 23.20, your stop loss is at 21.40, potentially going back to, the 30s. So that's decent. Now let's look at GSV. GSV is very, very interesting as well. So it's sitting on the longer term 61.8% Fibonacci level, which is at 60 cents. Okay. So, and then on the shorter term Fibonacci level, it's 59.31. So really, 59.31 needs to hold. If this doesn't hold, then you're just out of the trade. You can't really think too much into it. If this crosses below this fib level, you can set a stop loss a bit below it at even 58.75. If 58.75 doesn't hold on GSV, then then I would be very, very careful, especially since they have earnings on April 1st. So usually stocks they tend to run up into earnings, but the fact that it's falling is not a good sign. So I would be very, very careful and wary. If you liked the video, definitely give a thumbs up, like, comment, subscribe. If you want me to give technical analysis on a stock for tomorrow's video, drop a comment in this YouTube video of the stock that you want me to go over for tomorrow's video. Thank you so much for watching. Have an amazing day.